Welcome to the Portfolio Builders Club, where we talk about everything related to a portfolio, why you should start a portfolio. It's really the best thing to do. You need to make your money work for you. You definitely want to work smarter than harder and not harder, and you want your money to do all the work for you. So long term, the best way to wealth, freedom and influence is through building a portfolio. So let's get going. Today we're just going to go over a few of these ETFs and stocks and see where things are. So starting today with TQQQ. This is the triple leverage QQQ matched to the Nasdaq here. So what you have here is a lot of explosive growth that's going on right now. We are on the upside of things. Explain the chart here. The blue line represents the 200-day moving average. It's sort of shaded in, represents sort of water and that sort of thing. As the tide goes lower, and then the tide goes a bit higher, and the price starts to jump out of that water. That's sort of the symbolism that we have here, just to sort of help visualize at a glance what's really kind of going on and whether you should be long or short, a position. So right now we're in the long phase. We have had this sort of flip that has occurred. Let me show you kind of where it's flipped over right through here. Price was bouncing off of this, and now price come up and bounced above it. So you got sort of like a flip in the price that's going on here, in addition to price being above the 200-day moving average. And this other line here that turns red when it's going down and green when it's going up is the 50-day moving average, EMA. And price is above that as well. So you have a lot of upward momentum at the current time. Doesn't mean that it won't pull back and that sort of thing, but the idea is that we've sort of ended this downward phase and we're starting this upward phase. And if you look at some of the other markets like SPY and things like that, you'll see that they were fully recovered, and we would expect this to continue to recover. Of course, triple X is gonna not require as much to go up to be equal to these highs, I guess, here in terms of the price that it's matching to. But overall, you have these potentials and these opportunities that exist. So if you believe in the United States and the stock market, basically it just always continues to go up. Mostly, so that's what our anticipation or expectation might be for this. So looking at SPY, you can see how the SPY, which is the S&P 500 ETF, has also pretty much recovered. From these were all-time highs here, and we had that dip in over time. Now it looks like we're above water here on this, above the 200-day moving average, and continue to move up and upward and out of the water here. So it's really important to look at things like that and understand, as we break out of this, you're going to start to hear the news. And right now everybody's talking so negatively about the economy and this, that, and the other. But the reality is we've been in a recovery for way back here, back in 2022, we started to recover. So the reality is the market's going to recover. Folks are still going to make a lot of money on the way. If this goes a leg similar to this leg here, if it continues up, a lot of people are going to make a lot of money. But all the naysayers are going to start to flip in the news, and everyone's going to act surprised, that we've recovered. And, really this has been a long time coming. Here's the Dow Jones ETF. You can see how that's pretty much recovered as well. And as we look at some of the stocks and underlying stocks, you'll see how they've already recovered back to their all-time highs, despite what they say about the economy. ARK Investments, this is Cathie Wood's ETF, and we expect this to really take off. She did a really great job coming out of the pandemic. So, if this were to move all the way back up to those levels, that's about a 200% gain, related to that. So there's several ETFs that you can invest in. ETFs are exchange traded funds, and you can invest in these. It's a basket of stocks underlying that represent the total of whatever those underlyings are. So if it's the Dow Jones that they're looking at, or the S&P 500, 500 top companies based on their criteria, or the Nasdaq, which are more tech companies, or if it's ARK Invest, maybe invested in several different things, in that particular ETF. But these sort of gauge the market. There are other ETFs also. There's some directional directions 1.5 leveraged, and there may be some 1.7 and that sort of thing, but that are out here for Apple, Amazon, FANG stocks. You got Google, Microsoft, Nvidia, and Tesla. So if you want a little bit more leverage, but you don't want to use options, you may want to look at some of these ETFs. And my advice really is not to go into options unless you really season with that and you have quite a bit of capital that you're willing to lose, with options. Options requires you to lose in order to win. So basically, for options, and unless you're just using long-term options. So you can look up leap options in order to kind of get a better understanding of those. Some more ETFs that you maybe didn't know about would be some like these bear and bull ETFs. And then we have FANG ETFs based on FANG stocks and that sort of thing. So you can kind of take a look at those and see if there's something that interests you. Here you have this Bulls 3x leverage. It is now out of the water, moving in a positive direction. It did have like the flip that kind of happened where it was bouncing up and down. Here now it's up and bouncing up. So if we were to draw a line to sort of see the flip that took place, you kind of see it there, that we were bouncing below this, now we're bouncing above it. And that is what I refer to as a flip in the market, official. All right, and then next up, you have about 115% just to get to here. Maybe it's 200%, to get all the way back up. But again, these are leverage ETFs. You have to be careful with leverage ETFs because they can go down 3x as well. As you see here, this went down 3x, and even if the underlying market recovers, it doesn't require for a 3x to go all the way back up to where it was previously in order for it to recover. So it's not exactly apples to apples when you're using a 3x leverage. You could lose quite a bit on the downside. Let's see what we have here. If you stay in these trades, you need to definitely get out of them if you're negative. But like for this one here, it's 92% down from when it was at the highs. But when you look at it going back up, you see it has 400 or 500%, So it's not apples to apples, so you can't expect it. If it does go all the way back and go 1,000%, it may do this and eventually it may, but it doesn't require this. If the underlying goes up a certain percentage, we're just saying, okay, if it went back up 100%, the underlying went up 100%, and this is a 3x, you're expecting this to go up 300%, which would be just to here. So you don't expect it to go all the way back to the top. It's adjusted in order to be 3x. So you just have to understand that when it comes to leverage ETFs. Now, ETFs that are not leveraged, yes, you would expect them, such as we were showing in the beginning, like the Dow Jones, we expect them to fully recover, and these are what those other ones were sort of based on. And then like TQQ versus, if I bring up QQQ, see how it's almost recovered here. That's not leverage, but when you look at the leveraged ETF, you see that it probably went down 100% or 90% or 80% or something, but then it only, even coming back to here is already like 300% gain on a TQQ. So you don't want to ride it down, but if you can ride it up, you do want to ride it up, or if you're going to ride it down, you don't want to ride it down for a short time. And if you get stopped out, you just get stopped out, and you can always jump back in at some point. But the idea is you really don't want to ride these all the way down and hold on to them, because you really won't gain back what you lost, because it just works a little bit different. It's all adjusted. So again, it is a nice tool to use if you don't want to use options, though, because options have expiration dates, and maybe you need to hold on to it for a little bit longer beyond an expiration date in order to see it reach whatever your price target might be, and you can do that at least with leverage ETFs. But again, the downside is if you take a loss, it's going to take a really huge gain to get everything back if you take a loss. So if you take a huge loss, so you want to keep your losses small, such as we generally would look at the 50-day moving average. And if we stop out early, we just stop out early. But the idea is that we have captured some profit in that process. But if this goes, starts to turn red and then we actually go underwater, that's pretty much a good time to get out. There's no need to really hang out in here unless price comes back up out of the water and continues up with an upward trending 50-day moving average as well. But right now, like for all of this, you would really want to sit out of all of this. You may have gotten in for a little short spell here, but you would need to trail your stop so you could get out, if it doesn't come out of the water. Same thing, you continue, and then eventually it finally does come out. This is where you really want to start to get into this here. And then once you start to pull back, if you're trailing stops, you would go ahead and get out and then wait for it to start moving up again. And once it came here, dipped in and came back out, now this would really be the time to sort of get back into that. Again, we're breaking this trend line as well, and it's time to get back in, ride it up, have some sort of trailing stop process to, so that you're not catching out all the pullbacks and that sort of thing, and just continue to ride it on up. Right now, it's on the upside. So even if you put a stop like below this low here, if it never hits that low again, similar to like, let's say you put one below this low, it never hit that low again, you're always positive, to some point. With a XXX ETF, you do need to consider getting out at some point, because it is going to come down and you don't want to take that triple reduction in price, So at any rate, that's sort of the story there for TQQ. All right. Take a look at some of the stocks really quick. You got Apple stock here. As you see, fully recovered from all-time highs. It's fully recovered over here. And this is the story. And this is the story I want to tell to all the people out there is you can't necessarily just consider the economy and the news and the woes. And I know they're having layoffs at some of these exact companies. They're having layoffs. But when you look at the bottom line, this is why you want to have a portfolio, is that you can still gain from the growth of these companies, the growth of the U.S. economy, the growth of worldwide economies and globalism. Like, you can gain from all these things, and we need to, because you want to eventually reach that stage in your life where you flip your money over some years to be multiple times of what it is today. So compound interest is a real thing. If you just stay disciplined and patient, you can succeed with a compound interest plan, and that's what you should look forward to. So again, here we go. Amazon, this is still looking positive. Still in the upward move. It did pull back some, dipped back in, but came back out, broke the trend line. Now it's green. We're off to the races for now. So we continue to watch that going up. If you have your stop here, it may never come back to this price for a while, and you're good to go. Again, you would have wanted to get in a lot sooner than now, but that's kind of where we are right at this moment. Berkshire, Hathaway, B, as you see, all of these have recovered beyond all-time highs. Here we got Bitcoin. So Bitcoin is a good one in terms of the growth potential. We went all the way down to this is Grayscale, Bitcoin Grayscale. So this is an ETF, but it does match pretty much the Bitcoin movement. So as you see, it was down here at $8. Now it's all the way up here at $30. Even from this breakout right here, when we came out of the water and came up and kind of pulled back again with the break of the trend line, that's been 50% gain since then. Now from here, we maybe go another 85% or whatever the price will be. You maybe wait for a pullback and then jump in, But the idea is we're on the upside at this point. Google, same thing. We're using the same methods to determine whether we should be bullish or bearish. Generally, you can always trade pullbacks, but you generally want to go with the trend. The trend is up right now. All-time highs are here, so Google very close to all-time highs. And again, if you watch the news, you'd think there was something totally different going on, and the news will act surprised when most of these are already recovered. Mara, again, this is a Bitcoin play, 70% to get to just this level here, so we'll see what happens. Meta, 16% away from all-time highs there. Microsoft already broken through all-time highs. They had this sort of marked as the moon. Now we're going around the moon. here. So continue to watch that, continue to grow. And like I said, these companies are breaking out despite the news. Here we got Netflix. So there was a gap here in price. So generally all gaps are filled. So what we're looking for here is for this gap to fill for at least that 10%. We might get a pullback out there, who knows, but we are on the positive side of things. Again, if you were playing the momentum breakouts, you would draw a trend line and go ahead and jump in when the trend line breaks and everything starts to look green. The 50 days starts to look green here. So that's pretty much the method. Not a lot of complexity to this process. Want to keep it simple and go with patience and work smarter and not harder. Like you could day trade every day, which is okay, but because a lot of people enjoy trading, but the other part of it is just to let your money grow and not day trade every day, and just continue to put more and more into your accounts to grow that portfolio for that generational wealth. Also, so we're looking here at Nvidia. Nvidia is moving up as well. Again, as we passed all-time highs for Nvidia already, there was a gap that was created here, so we do expect it to come down and fill that gap at some point. So that may be some big news or something, and everybody kind of goes crazy that it's gapping, coming down, but it needs to fill this price just to make it a fair market, that if people were waiting to get in at this price, they kind of skipped over them completely. So generally, we'll come back down to that. That's around the $350 level. So we just have to wait and see what happens here. Right now, it's still positive, still bullish, that sort of thing. All right. Let's see. Google. Here we got JP Morgan. I have quite a few in this top list here. Did I go over these? Yeah, I think so. Right, NVIDIA, Tesla. So Tesla is here, is really on the upside here, because we dipped into the water, below the 200-day moving average into the water. Now we've come out. And the only thing is that we had this one trend line here on the upside, so it did go below that, and which could signal that if we don't break above this trend line here, that it will just continue to drop again, maybe to the 150 level, and then go up. The thing with Tesla is in my view, very manipulated in terms of the CEO and the leader of the company speaking out on different things, and the stock kind of performs based on what's happening there, and then the leaders of the company are selling the stock and rebuying it and that sort of thing, so you don't know the purpose for which they may be making certain announcements, like, they'll say the Cybertruck's not going to come out, or is it going to come out, or whatever, and everything changes, but I don't know if they want the price to go lower so they could buy it back, or buy it lower and then, ride it back up. But the concept here is that right now we're at a very decisive decision point where we have to kind of watch what happens. Is it going to break out above this trend line, or is it going to sort of respect that trend line and continue to come down? So we'll have to wait and see on that, Tesla. So very unknown. But once it does break out, you'll be in a better position to see where it's going to go. TSM, Taiwan Semiconductor. So all the fuss about Taiwan and their ability to create semiconductors for the world, really. And that's where we have the conflicts with China and some of the other things about Taiwan and whether it's its own state or not. But Taiwan Semiconductors is the company that makes these chips. So if they continue to have the success that they've been having and the demand that they've had, you would expect this to eventually go back up and go back to the all-time highs, right? That would be roughly 25% to get to here, maybe a little bit more to go all the way back to the all-time highs. But again, just an opportunity that sits there, for anyone who's patient and who's just building a portfolio, looking for opportunities for their portfolio. Again, everything that you invest in, you have to monitor, and you have to have some sort of exit strategy, whether that's a trailing stop strategy or it's a price target strategy and a stop loss strategy. You have to have some sort of strategy associated with these in order for it to work for you, because we can't say definitively that it's just going to go to this price tomorrow. It may come down here first and down a little bit more and then finally go to this price, So, but you have to have your risk management in place to determine, well, at what point or how much of this do I want to capture some of this profit that maybe I'm making from here to here, and I'm going to put my stops here, and then if it goes up more, I'm going to stop, and if I stop out, I'm okay with that, and I'll either move on or I'll wait for it to pull back again. So you have to have your own strategy associated with how you're going to get in and out, and how you're going to lock in sort of profits as you go, so that you can end up positive, on the year, or positive for multiple years if you go long term. Even long term, you still want to have stops, because you don't know what's going to happen with a company. If you're going 5 years something, and you put your stops here, and you're saying, well, this would be a 40% loss potentially. You can use the tools in TradingView to help you try to figure that out. So it is about a 40% loss if you were to drop this far. You say, is that the risk you want to take? Or are you saying, oh, well, I only want to risk about 20%, and I'll go ahead and change this. I'll start with the 20% drop because I want to give it room to breathe. But if it goes above that and we're positive, I'm going to move this stop up, and I'm going to make it so that it's only, 10% or something like that. And then eventually I'll flip it and lock in profits, and trail my stop that way. So TradingView is a good tool to use to monitor things and draw in your charts, and good charting software and that sort of thing. So definitely consider TradingView if you are interested in trading. It's just a great tool. All right, we have other companies like Affirm. So as everyone's going out and doing their holiday shopping, that sort of thing, now you get certain options that appear at the bottom of your payment screens that say pay over time or pay later, stuff like that. And that's often through companies like Affirm and Upstart, I believe is the other one. Upstart is the other one that does that as well. So we expect these companies to have some growth. I don't know if they'll always be profitable because people have to pay them back in order for them to make money, but the use of the service is on the rise, So we'd expect these to eventually jump out of the water and continue to be positive. So here's a good example of something where you want to have that trailing stop or some sort of method to know when to get out. So once it dropped here, maybe you decide, okay, I'm actually getting out. But if your trailing stops more based on the price, maybe you would, every time it consolidates, you just put a stop in, and then if it drops, you just get stopped out. There's always another day to trade. If you missed it, so then you would have, if you got stopped out up here, you still missed all of this loss, and then you could wait until you start to see it above the water again, or at some sort of previous support or something before you jump back in. So right now, I'm not getting in this unless it goes a little higher. Yes, will I lose some profit that somebody else will gain? Sure, but I can't predict the market. I'm just reading what the market is doing, So here's SoFi, same thing. It's been on this downtrend. It is popping up above the water here, but we really don't have much upward momentum. We have really downward momentum right now. So this is one I'm just going to stay away from for now. But there are some opportunities here if this company is to go up. Again, you have to watch the CEOs and things on these companies as well, because they're very popular in social media, and that can affect the stock as well. So social media leaders. So those are just a few that I want to go over today. I know it's quite a bit, but just wanted to jump things off. So welcome to the Portfolio Builders Club.